Hello, superstars. Welcome back to LarryFx Academy, your number one spot for learning forex trading the smart way. In today's lesson, we are breaking down the concept of candlestick. We will be explaining what is candlestick and the terminology behind candlestick formation. Now, let's get to it. What is candlestick? Candlestick are style of financial chart used to describe price movements of a security derivative or currencies. Alright? What do I mean by this? Candlestick are the financial chart that show the price movement, that tells us the bias of the chart, bias of the market, right? That shows that buyers are what? Buyers are in control or sellers are in control. That tells us who is the control of the market. Alright. Now let me show you what I mean by this on my chart. All these things you are seeing here is what we call candlestick. People use different colors. You can use any color of your choice. Alright, but I use green and black. Alright, so these are the candlestick we are talking about. This is what you call candlesticks. Alright, the green and the black is what you call candlesticks. Alright, and on this candlestick, we have what you call bullish and bearish candle. The green one is what you call bullish, while the black one is what you call bearish. Right? Some people use green and red. If you have been seeing green and red, the green means bullish, while the red means bearish. If you have been seeing white and black, the white means bullish, while the black means bearish. Alright, this is what you call candlestick. You show all the price movement, tells all the buyers are in control or sellers are in control. Right? That's why I say it describes the financial price movement. Describe the movement of the market. Right? So for you to understand candlestick, you need to understand time frame. There's something we call time frame. Time frame is the time taken for each candlestick to form. Alright? It's the time taken for each candlestick you see here to form. And we have different time frames. We have 1 hour, 30 minutes, 45 minutes, 2 hours, 4 hours, 1 day, 1 week. Alright? So for this now, I'm using 1 hour. So for this candlestick here, each candlestick you are seeing here represents 1 hour. So it takes 1 hour for each candlestick here to form. That means the interval between each candlestick you are seeing here is 1 hour. Alright? That's time frame. If I change it to 2 hours, alright, so each candlestick here represents 2 hours. Alright, now if I change it to 3 hours, this is 3 hours. Alright, this is 3 hours, which means each candlestick here represents 3 hours. Alright, so time frame is the time taken for each candlestick you see on your chart to form. Alright, now if I change it to 4 hours, that means this candlestick you see on my chart here represents what? 4 hours. That is that for that. Alright, let's continue. Alright, time frame refers to amount of time it takes a candle to form. If you are looking at 1 hour time frame chart, each candle represents an hour interval. I just show you guys now. So each candlestick you see on your chart, if you are using 1 hour, each candlestick you see on your chart represents 1 hour interval. Like this BTC USD now, like this now. Each candlestick you see here on this, my example here represents 1 hour because this is 1 hour time frame. Alright. Now, the green means bullish, why the red means bearish. On this chart, there's some trick you need to understand. On our chart, there's some trick you need to understand. There's some trick you need to understand on our chart. You can see on our chart, we have the eye, we have this, all these long, all these lines, low and high. Alright? And now we have the open and close of each candlestick. Right? We have the open and close of each candlestick. Now for bullish candlestick, which is the green one, it always open below and close above. Alright? While for the bearish candle, which is the black one, it always open above and close below. Alright? Bullish candlestick, let me come again. Bullish candlestick always open below and close above for bullish, while for bearish, it opens at the above and close below. Alright? And on our candle, you can see we have lines. Some have a line, some don't even have a line at all. Right? You can see some have a line and some don't have. This line means, okay, let me use this as an example now. For this bullish candle, we have the open here, alright? This is the open, alright? And this is the what? Close. Alright? And this is the high. Alright? And we have the low. Alright? Now, the terminologies behind this high and low, let me tell you. When this candlestick opens here, due to the selling pressure, the sellers push the price lower to form what? To form low. After forming the low, buyers stepping, they push the price high to this level. After getting to this level, sellers stepping. After sellers stepping, they push the price low again and close here. That is why we have this high. And the high is the highest price for that time frame. Right? And the low is lowest price for that time frame. Sorry for that. So, and the low is the lowest price for that time frame. This is the beginning of the candle. Sellers push the price low to form the wick or low. After that, buyer stepping, they push the price high to this level, right? Before the seller now stepping again to push it down. Start pushing it down, the market close here. The candlestick close here for that time. Alright? So that is the terminology behind this high and low. Now let's go to our notes. The high is the top of the bar, which indicates the highest price for that time frame. Like I just said now. The open, the line horizontal, the little horizontal line on the left is the open price, the price at which the bar started from. Right? The close, the little horizontal line on the right is the closing price, the price at which the bar ended, or the price at which the bar finally closed for that time frame. So the low is the opposite of what? Of the high, which is the lowest price for that time frame. Alright? Continue. Now, this is what I'm explaining. Now, I see this body. This is the bullish candle, and this is what? This is the bearish candle. Right? The bullish candle, like I said before, it always open at what? At the bottom. Right? And close above the open. And we have the eye. You can also call your eye upper shadow, or you call it wick. Right? You can also call your low the lower shadow, or you call it wick. So we have the real body. Right? We have the eye, low, open, close, and the real body on our candlestick. F for bearish candle, we have the open, we have the close, we have the rebody, we have the low and the high. Right? So that is that for that. Now let's continue. Alright, if the close is above the open, we can see that the candlestick is what? Is bullish. Right? When you see a close is above the open, that means the candlestick is what? Is bullish. Can represent it as what? As green or white, any color of your choice. If the candlestick is below, the close is below the open, you can see that the candlestick is bearish, which indicates what? Sellers. Alright, if the close is below the open, you can see that the candlestick is what? Is bearish. That indicate that sellers are in control for that moment, for that time frame. Alright, so you can represent bearish candlestick black or red, any color of your choice. Some people use purple and white. Some people use different color, any color of your choice. Now we have candlestick body size. Candlestick body size. If you check our chart, let's check our chart. You can see that some candlestick they did not even have a body. Some has a body, right? Some don't have. Alright, that is what we call candlestick body size. Alright, they represent a level on our chart also. They are not just there. Alright, now for all this small body, let's say for this now, okay, let me use this as this one. I think I have an example in my notes here. Okay, this is the example here. So this short, this body, this bullish small body, indicate that buying period for this movement is low. That buying momentum for this movement, for this time frame, is low. Alright, why this one indicate that buying momentum for this hour or for this minute is very strong. Alright, we can say that this buying prayer is very high because it has a strong body. Why this one don't have a strong body, just a small body? It represents that buying prayer for this moment is very, very low. Right? The same thing applicable to this. The selling prayer for this moment is low, while the selling prayer for this one is very high. That's why we have this body. Alright. Now let's go to our notes. Candlestick have different body size. They have different body size. Alright. Long body refers to what? A strong buying or selling prayer. A long body with a strong body. It represents that buying prayer is high. If there's a candlestick in which the close is above the open with a long body, this indicates that buyers are what? Buyers are strong. Like this now. This one, you can see, indicate that the buyers are what? Buyers are strong in this market, in this time frame, in this hour. Alright? And they taking control of the market during this period of time. Conversely, if there's a bearish candle in which the open is what? Is below the close with a long body, this means that the selling prayer control this market during this season time frame, like this now. Like this now. The selling prayer for this is what is very, very strong. But sellers are in control of this markets. Alright, that is that for that on candlesticks. So if you have any question, kindly ask in the comment section. Alright, and make sure you turn on your notification bell and share, like for more people, share for more people to watch so that they can benefit from our lesson. Don't forget to like. See you in the next lesson. Thanks for watching.